Hello, everyone, and welcome to this Fireside Chat looking at the evolving shared wireless infrastructure landscape. We'll be hearing today from LaChance, CEO and co-founder of Zenfi Networks, as well as Jennifer Fritzsche, who is the CFO for Canopy Spectrum. If you've got any questions for Ray and Jennifer during the discussion, please do share these using the chat function on the right-hand side of your screen. You can also engage with the Zenfi Networks team directly on the sponsors and meeting areas of the platform. Before handing over to Ray, I would just like to extend a thank you to Zenfi Networks team for supporting this year's virtual Metro Connect USA and for making this session possible, and to the rest of our sponsors as well for making the event the success that it's become. Now, without further ado, over to Jennifer and Ray to kick off the discussion.
Hi, Ray. Hi, Ray. Welcome. Thank you for allowing me the opportunity to interview you.
Thanks, Jen. I can't tell you how honored I am to have you interviewing me again. And it's been, we've done it many times now. So
we have.
Yeah.
That's right.
Great, thanks.
So I know we only have about a half an hour. We're going to leave the last 5 minutes for questions in the chat. So feel free to do that. But I do have some questions. Maybe I'll put it the kind of get out of the way question. You touched on this yesterday at the CEO panel. But I wanted to kind of deep dive a little bit more, in regard to the COVID impact on your business. I think the words you used was a log jam in New York City, but that New Jersey has actually been a little bit of a bright spot. And I wanted to kind of explore that, what you're specifically seeing, how COVID has impacted the business.
Sure. Oh, great question. Before I jump into that, though, I do want to give a little overview of who Zenfi is. So Zenfi is a digital infrastructure player in the New York, New Jersey metro market. We're a provider of fiber optic networks, network edge co-location, and wireless siting solutions. And we're primarily focused. We started the company in 2014 to focus on the mobile densification opportunity, and specifically the physical infrastructure required to support mobile densification. At the time, as a 4G world, as everybody knows. And it was going to evolve to 5G. So when we looked at dense network opportunities, that we were putting small cells and DAS remotes around New York City and the region, our goal was to work from sparse networks, sparse DAS networks to move toward denser 4G networks. And now we're getting into the 5G world where it's going to be an ultra dense environment. So over the past 6.5 years, since we started building networks in our region, we've built about 1,300 route miles of fiber optic network. We've deployed about nearly 50 network edge co-location facilities, and we've deployed 3,000 plus sites with about 6,000 sites under contract today. So we've done a lot of work with a focus in that space. So I just wanted to make sure everybody knew a little bit who we are. So
absolutely.
Back to your question. There's the COVID effect has been interesting for us. We've heard. I was on a panel yesterday, and it was split fairly even. We had the mobile infrastructure players, and then there were 3 of us, and there were 3 on the telecom services side. And when you heard the telecom services side, things are great. There's a lot of opportunity, a lot of build happening. We're closing deals left and right, things we never even imagined. Right. But on the mobile infrastructure side, where we have 3 primary customers, we ebb and flow with what Verizon, AT&T, and T-Mo do now. And clearly the merger last year, the T-Mo and Sprint, changed the dynamics a lot. There was a lot of questions on what assets they were going to keep, what they were going to relieve themselves of, and what they were going to build new. And Sprint and AT&T have been going through the normal cycle, build versus buy. They go through these cycles every few years. They want to build a lot, then they back off of that and they start buying. So the year was a mix of that, and then you layer COVID on top of that, and we saw some interesting dynamics in our New York City environment. The entire city shut down for quite a while. Sure. And we saw some interesting things happen with the mobile operators. One of the clear messages we started getting is the mobile operators who had been building in the central business districts of New York and really focused on getting capacity there, saw the capacity requirements there not dry up, but certainly subside somewhat, and now we're seeing a lot of requests in residential areas of the city. The city is about 70% zoned residential, and we're seeing a lot of requests, and that's a COVID effect. We believe that's a COVID effect, right? Where there's work from home, school from home, just people are staying home, right? So they're consuming a lot more bandwidth in neighborhoods where the predominant consumption of bandwidth wasn't happening before. So we're seeing requests, but I think the mobile operators are feeling their way around right now, and it's not. So that caused some pause. So we closed a lot of business in 2019 in New York and in New York City and in northern New Jersey. And the bright spot I was talking about yesterday on the panel with Jersey is we proved that our thesis. We merged with Cross River Fiber, northern New Jersey, wholesale network provider, network builder, and that was in 18. In 19, we proved the thesis that the geographic expansion and our product set of mobile focused overlaid on the Cross River network was going to make sense, and we closed some nice material deals in 2019, and we got to execute in 2020. So that was really a bright spot. We started navigating with mobile infrastructure there. In New York City, we continue to work, but there's been a logjam, as you said, in New York. We've had a franchise process now since 2004. Everybody started building networks in 2008, 7, 8. Really took off in 2016, again, with a lot of small cell activity. We've had a pause in the city. They have not opened a reservation period in 2 years now, which allows us to put small cells on poles. And it's been an administrative, bureaucratic slowdown. And part of that is because the industry said, look, the previous form factor that was allowed since 2004, modified in 2007, doesn't support 5G. 5G needs a completely different form factor on poles. So for the past couple of years, there's been that back and forth engineering a new design. So you will see, I think this year, that logjam will be released, and we'll be doing 5G sites in New York City on light poles, utility poles, traffic poles, something we had not been able to do because the design hadn't been approved, recently approved, and we expect to get started again. So 2020 was a pause year. COVID and 5G designs and TMO and all those things affected us. I think we're going to see things really open up this year.
That's great to hear. And I should have started the presentation, which kind of leads into my next question, is to you've given me probably my favorite quote that I've written about, talked about. Well, wireless needs wires, and this is especially true in 5G. And so you touched on it, but my next question was kind of, how is 5G? You're really not a consumer play per se, but how do you see 5G really, transforming your business? Some would say a major pillar in 5G is the advent of private networks. And I'm curious as to if Zenfi can play there.
Yep. Well, that's an interesting question. As a mobile infrastructure player of the three core elements, fiber network, wireless siting solutions, and network edge co-location, when you look at how the 5G networks are going to be architected, where it's delivering a lot of capacity at low latency, there's this concept of what I call network of neighborhood networks. And to support 5G and deliver on that promise, every neighborhood's got to have this center of the universe, or this edge co-location or edge data center facility. And out of that, you grow these fiber optic networks. We call them front haul fiber networks, where you groom in wireless sites from all over the place. And as the 4G networks become ultra dense then morph into 5G networks, there's going to be a lot more sites have to be deployed to support 5G, because they're using mid bands and high bands. And as you know, if you use the LMDS and millimeter wave bands or sub-millimeter wave bands, you have to have the sites closer together.
Sure.
So we have 5G is a great opportunity for everybody in the infrastructure business, especially if you do fiber, wireless siting, and edge co-location. So there's just a huge opportunity. So private networks,
no, go ahead.
Okay. Private networks are a real thing. And when you look at a company like us, we have three main customers for this business, right? And that's today. But as you start looking at the infrastructure we've deployed, this hard infrastructure, there's an opportunity for companies like us now to take our fiber out to a pole or out to street furniture or out to a tower and put our own radios out there now, because there's democratized spectrum available to us now. You obviously have CBRS spectrum. We're going to see more democratized spectrum that's available to the non-big, non-national mobile operators, where companies like ours can get into the business of building public and private networks across that spectrum and use it. We call that a virtual infrastructure play, where we will own and operate our own radios and use the shared spectrum, but now it's shared in a way that allows quality of service and class of service. Right now, in a CBRS environment, you'll get your slices and you get to use it, and you're the only one using it. They mitigate interference. We expect to see that in other bands. There's going to be a great opportunity. Now we go from 3 potential customers to all the MVNOs, for instance, where they could buy slices over networks. And then the next thing you can do on that is you can overlay private LTE networks, right? And that's where I think everyone's thinking. So there could be, private LTE overlay or a private 5G overlay on this radio network that we will build and operate. So this whole concept of going from physical network infrastructure like we do today, evolving towards a virtual network infrastructure of the future, this overlay network infrastructure, I think is a huge opportunity. We go from 3 customers to potentially hundreds.
Got it. Okay, because that really is what I'm hearing you say is a pretty big pivot in your business, because you really have been more of a physical infrastructure. So this is kind of a new chapter as you see evolving. Correct?
Absolutely.
Okay.
Absolutely. My one other comment there, it's a shared spectral infrastructure, right? Before the spectrum was hogged up by the mobile operators, and they had proprietary spectrum. The democratized spectrum, or the shared spectrum that's coming available, and even things like Wi-Fi 6 and 6E are going to create great opportunities. And our business plan over time is to evolve into our own wireless network operator as an underlying infrastructure to share with others, because others have great ideas. I'm sure they do a lot of cool things with it. We just want to create the underpinning.
Interesting. Okay. And it's really not just CBRS. It's interesting that we're speaking right now, because this morning, acting chairman, FCC chairman, Jessica Rosenworcel seems to be presenting an accelerated timeframe to get out the 345 to 355 gigahertz spectrum in October versus December. And it seems clear that there will be a sharing component to that. So I would assume that's even the more of this shared spectrum that comes through the pipeline is good for your business, or good for the concept of this pivot you're discussing, correct?
Yeah, absolutely. Without question, and I looked at CBRS, and I think many in the industry said it's an experiment in democratizing the spectrum and making it available to everybody, large and small. Now, obviously, the large players bid the most and got the most of the CBRS auction. But there's a lot of intermediaries that got spectrum, and there's going to be a big resale market or a secondary market for that spectrum. Companies like ours could have bid directly, or could take advantage of the secondary market to create these networks. And CBRS was the example. I think we'll see it across a lot of other bands as they start, finding new spectrum to make available.
Interesting. It kind of, again, leads on a good talking points, because you're leading right to my next questions. I just was looking back at my old writings on Zayo, and my initiating coverage article or report at the time said, Zayo, the beauty of a horizontal tower. And, one of the things I said in that report way back when is that, unlike the tower companies, which everyone agrees is a tremendous business, but you touched on it earlier, they have 3, maybe going to 4 customers, so high customer concentration, yet a significant moat around their business. For fiber, I think it's, a very good business for other reasons, but one of the main ones is you have more customers. And what I'm hearing you say is just that. So I assume you agree with this kind of horizontal tower analogy.
Yeah, actually, I've done a couple of talks on that specific topic. We call it the horizontal tower also. And if you think about it, we don't call ourselves a fiber company. When we started this business in 2014, we never called ourselves a fiber business. Everybody else did, right? Because they just assumed we were doing what everybody else was. But we came into the market as a mobile infrastructure play to support the densification of the mobile network evolving to ultra dense networks, right? But the thematic there's a convergence thematic, right? And the convergence thematic is you got the fiber players, you have the data center players, you have the tower operators, and you have these the software layer that all has to work together to create an end-to-end mobile infrastructure to support the demands of this intensification. We evolved to, we call it a CRAN infrastructure for simplicity, where again, in the neighborhood, there's a neighborhood network, right? And the neighborhood network has an edge data center, edge co-location facility. And out of that, you have fiber optic network and you have a wireless site. So if you look at the edge data center, that is actually analogous to the ground space on a tower. And if you take the fiber span that comes out of that edge data center and goes to a light pole, for instance, with a small cell on it, the analogy of that front haul fiber piece is that's the steel in the air. That's the vertical, that's the horizontal tower piece. So you have ground space, horizontal tower space, and they have wireless stubs where you'll have a light pole, utility pole, street furniture, building facade, where you put radio heads or small cells, and you're building a tower on its side. Rather than being 200 feet tall, though, it's 30,000 feet tall, right? So and you cover entire neighborhoods with it. That's a really interesting analogy, because if you're in the mobile infrastructure space, you don't just do towers anymore. You don't just do small cells. You don't just do fiber. You do all these elements. You pull it all together, and you create a complete turnkey solution. Because one thing the operators don't want to do is buy fiber. They do it, but they're not loving it. They don't want to get fiber from one player, get their own sites. They don't want to even build their own nodes. It's just it's not their core competency, and they look to intermediaries like Zenfi and others in our market to turnkey that whole solution. So if you're just a fiber provider and you want to be in the small cell market, you're missing a huge piece of the opportunity there. There's an opportunity for 10, 15, 20-year deals, long-term deals with great credit counterparties to construct the whole thing and the beauty of it is we're building shared infrastructure too. So once we build it once, the edge co-location, the front haul fiber, or even that wireless vertical site, it's reusable for just like a tower. So I fully expect, by the way, to get complete tower economics. I want tower multiples on our business because we're a tower company.
Exactly. So, I mean, you touched on the edge, and this was a theme Colby talked about, I thought, really well on Monday when he presented here. So if I just heard you right, you think the edge as defined is really the base of the tower, or could it take, do you see the data centers playing a role here?
Well, so when I say this network edge co-location or network edge data center, I'm referring to a smaller footprint facility that's at the center of a neighborhood. And let's take a neighborhood in Brooklyn, and you take you build a little. These don't exist today, right? You could go to central offices, they exist, but they're harder to work in. There's a real opportunity for this whole new ecosystem of data center to expand out to these smaller footprint, couple thousand feet, 2, 3, 4, 5,000 feet. In fact, we've done a few of them now where we've actually purchased the buildings and we're building out their little data center, little bunkers to house this mobile edge. And today, the application we're putting in these mobile edge facilities are the broadband processing, right? The baseband processing for the mobile operators. So again, it's the edge data center, baseband processing, front haul fiber out to a radio head somewhere vertically. That whole, they have to be built or they have to be retrofitted. And one idea is retrofit central offices, that would certainly work, or build new facilities that are like central offices in the neighborhoods. So there's a huge opportunity, but it's still part of that whole data center. It's not the massive multi-100,000 square foot data center. These are distributed, smaller facilities. You don't get the same economies of scale, but when you combine it with your wireless siting business, your fiber optic business, and your edge data center, and you do that turnkey, you get great economies of scale out of it.
And are you seeing the other theme that I think both Mark Gansey and Colby spoke about, and it's the convergence. I was always kind of in the Crown camp where I thought owning fiber and fiber and towers allowed them to have kind of one conversation with the carriers. Are you seeing that evolution from carriers? It didn't seem like it was always there, but maybe it's more on the come.
Yeah. Look, it's there. It's been there, and I think it was a lot of players that in our space may not have realized that. Again, we started our business based on that convergence thing. And by the way, if Mark Gansey said it, I believe it because he's got great vision. So we think we started with the three core elements: edge data center, fiber optic network, wireless site, the tower. Right? They all go together. And if you don't, again, when you're dealing with the mobile operators and you're just selling the wireless site, or you're just selling the fiber piece, or you're just in the edge data center, it's much harder to put a deal together for small cells. And a city like New York is going to have tens of thousands of small cells deployed. We only have less than 10,000 today. We're going to have tens of thousands. We need all those things done throughout the entire city. And if you don't deliver all three, I'm telling you, from our experience, the AT&T, Verizon, and T-Mobile aren't looking at you unless you can pull that all together in our region, because they want turnkey. Maybe it's because it's a unique region. It's more expensive to work in New York. There's or New York Metro, a lot of challenges, but they all want turnkey from companies like us.
Got it. Okay. And maybe just asking about the customers, the three logical customers you just mentioned. I mean, they all will see, I think we're going to see C-band results this week, possibly today. They all spend a lot of money, some more than others. Do you see any signs of stress on their, that they kind of have to foot that bill? I mean, it's kind of between a rock and a hard place, because the spectrum really isn't worth anything unless they touch people like you to deploy it. And yet they've paid the piper big time to get the spectrum. So Curious as to your thoughts there.
Yeah, look, I think that it's probably contributed to some of the slowdown in decision making and issuance of new deals. They do plan, a year, 18 months, 2 years in advance on these builds. So some of the stuff that we're doing now was contemplated a couple of years ago or a year ago. But it has to, as Alex said yesterday during the CEO panel, there's no way they're spending $90 billion, or the majority spent by those three players, and not having to deal with that from a balance sheet perspective. The silver lining there, though, for intermediaries or shared infrastructure players, neutral host players in our space is, if they want to have the coverage and capacity any and everywhere they need to put it, the only way to go is shared infrastructure. It's why the mobile operators don't own towers anymore, right? They sold all their towers to intermediaries because they can't find the value in owning a tower and putting just their stuff on it, right? But in a shared economy, there's a great opportunity for the sharing. So that goes, again, for edge colo, fiber optic network, and the wireless sites. If we could share all those components, or share one of the three, or two of the three, or three of the three for each deal we do, the economics, they get much better for the operators. So if they want to be where they want to be, they have to share. And so I think, again, companies in our space are taking some of that balance sheet risk, on ourselves, but we are spreading the risk around multiple players. And we're going to evolve towards more than just three of them. As I said, as we move to virtual infrastructure and virtualizing the radio network, we're going to end up with 20 big worldwide MVNOs and then private network overlays for mobile and fixed wireless applications, IoT. There's just going to be a lot of stuff overlaid on this.
So as you virtualize, and I assume that means you're a pretty big believer in Open RAN, which I think Acting Chairman Rosenworcel also spoke on a plan for that. Is that a fair assessment? I mean, that you believe in the kind of Charlie Ergen's vision of where the world's going?
Yeah, absolutely. And again, I was looking through presentations I had done going back to 2012 and 13, and we talked about this evolution, and I was off by a long time, 5-6 years. But some of the stuff we were talking about, how the network, again, democratization of these networks and opening of the networks to create these overlays was the way it's going to happen, and it's happening. It is happening now. So yeah, I think the evolution of these networks is going to be pretty amazing. There's going to be things we never even thought of, applications we haven't thought of, and participants in the market using infrastructure provided by intermediaries like us, but not owned and shared across multiple wireless operators.
Got it. Ray, we have one more question, then I'm going to end with one question after this. One came through the chat. It says, do managed services play into your turnkey solutions provision, and how do partnerships with other businesses help you drive this?
Yeah. Look, so Zenfi and companies like us are really focused on creating underlying infrastructure, physical space, power, and connectivity that we allow others to leverage to build value-added applications on top. So they build their networks on top of our network. We're the underlying provider. So our customers are our partners. We want to see them succeed. We want to build a robust fabric that they can do what they want to do. It's going to evolve, as I said, to what we call virtual infrastructure now, those shared radio spectrum, where we're operating our own radio networks. And that will further enhance our ability to partner, because the cost of doing physical infrastructure, when we go and procure a light pole or put street furniture out there to put a radio on, there's a huge cost to that. And to put a single Verizon radio or an AT&T radio on it, it's very costly. But imagine if we could put our own radio, we could share it across 20 or 30, potential customers. There's a lot of opportunity there that we're going to be able to build more network and share it across more partners' networks, right? So wireless ISPs, WISPs and private LTE networks, IoT operators, along with the mobile virtual network operators. There's a lot of opportunity to partner, but we're underlying enablers, and our goal is to just create robust fabric that others can leverage.
Ray, my last question, in terms of time, 5 years from now, when we're all standing around the Eden Rock, going for nice dinners in South Beach, curious, what does Zenfi look like then? What is the name of the panel you're on? Is it a virtual physical infrastructure player? Are you opening the keynote? Who are you then?
I don't know. I hope one day that I'll be able to do things like that, but I'll probably be talking about 6G, right?
Okay, right.
We should be, by then we'll be talking about 6G, of course. But the reality is, I think our company, I expect that we'll have expanded our geographic footprint. I expect that this concept of virtual infrastructure and us owning and operating our own shared radio network will be the primary business that we're in. I expect that the productization across that virtual network will be what we're talking about. And again, still an infrastructure player. We're not, we intend to always be. We're not going after the retail opportunity. We're not a telecom services play. We're underlying infrastructure, but we're extending that infrastructure to radio spectrum. And to do that, we have to own and operate our own radio network.
Well, it's going to be fun to watch. You said you were off. I'd say you were ahead of the trend way back when. So thank you so much, Ray, for this opportunity. And thanks to everyone at Metro Connect.
Awesome. Thanks, Jen. I really appreciate you doing this for us. Thanks.
Great. Yeah. Thank you again to both of you for joining us today. And for those tuning in, this session is available shortly on playback. Also, if you would like to engage with Zenfi Networks further, they are hosting a networking room in the Open Door Networking Hour today at 1 p.m. So go chat with the team there. And otherwise, you can also see them in the sponsors and meetings area on the event platform. So thank you again to all for joining us today, and see you at Networking at 1.
Great. Thanks, Drew.
I don't think we got to one question there.